Hello and welcome to not another anime lore and theory video. I'm Shergok, your host, and today we are going to take a closer look at Bitcoin. But before we're going to take a closer look at any of this, let me quickly thank my Patreons for supporting this channel, as well as say thanks to all users of the YouTube Thanks function for making one-time donations. And with that said, let's get to the topic at hand. And this will be a completely different video. People who have been watching me for a while know that I have some basic knowledge, not only of anime, but also of finance. And that's why I want to explain what Bitcoin is, because it is now back in the news and it's talked about to no end. And more importantly, what you are investing in when you should choose to buy Bitcoin, and what the opportunities and risks are that come with this investment in general. And a disclaimer, this is not tax or any legal advice, but simply just my own opinion and views on Bitcoin itself. This video is also not sponsored or anything, but again it is just a for your interest video on Bitcoin, how it works and why people speculate on it, and what the opportunities and risks of Bitcoin are, at least in my own opinion. And I currently also don't own any cryptocurrencies, so I am not invested in Bitcoin or any other cryptocurrencies as of right now. Now, with that said, what exactly is Bitcoin? Bitcoin is a decentralized protocol that is stored on all participating computers in the Bitcoin network, because each individual block is read and verified by every computer in the network. This chain of blocks is called a blockchain, where every single Bitcoin transaction is saved on. And this is also what the coins we call Bitcoin run on. Bitcoin is not controlled or managed by any central bank or state, and the only guarantee that the blockchain on which Bitcoin runs is secure and works is the computing power that secures the transactions. The more computing power, the more secure it is. As a reward for securing the network, new Bitcoins and transaction fees are distributed to the participating computers. But there's a winner-takes-it-all principle behind it. But this creates the incentive to secure the network with one's own computing power. And that brings us to what most people are most interested in. What are you actually speculating on as a Bitcoin investor? Well, first of all, you are speculating on an increase in the value of Bitcoin relative to the currency you used to buy it, such as the dollar, the euro, and so on and so forth. This increase in value happens in three primary ways. Firstly, inflationary currencies, like the dollar or the euro, constantly lose purchasing power due to inflation. In other words, a dollar from 2020 has more purchasing power and could buy more goods and services than a dollar from 2024. And a euro from 2010 could buy even more goods and services than a dollar from 2020. So this kind of money is losing more and more value by design. In contrast, there's a fixed limit of 21 million bitcoins that cannot be exceeded, since bitcoins are constantly being lost. For example, when someone forgets their passphrase to their digital wallet, the total number of available bitcoins is also de facto constantly shrinking once all 21 million bitcoins became available. This makes the currency deflationary by design, and the value of bitcoins theoretically increases as the maximum amount of available bitcoins decreases relative to the set amounts of goods and services that can be paid for in Bitcoin. Furthermore, investing in Bitcoin also involves speculating on the adoption of Bitcoin as a currency. Why does this increase the value of Bitcoin? It's simple. If, for example, 21 million Bitcoins are available and goods and services worth $21 million are traded in Bitcoin per day, the value of the Bitcoin in this case is exactly $1. If the amount of goods and services traded in Bitcoin increases tenfold, then the price of Bitcoin, in this very example, increases also by a factor of 10, with all the other things being equal. An example of Bitcoin adoption would be the introduction of Bitcoin as a currency by the government of El Salvador. Simply speaking, the more people use Bitcoin as a means of payment, the more value each individual Bitcoin has, since the number of goods that need to pass through the Bitcoin increases. The third major source of value increase is Bitcoin as a store of value. Investors assume that Bitcoin will steadily gain in value, which has generally been the case over the years, on average. Therefore, they buy Bitcoins expecting it to rise further, which leads to Bitcoin being removed from active circulation. As a result, the supply of available Bitcoins decreases and the price rises. So far, Bitcoin has seen rapid growth from just a few cents to a value of around $72,000 per coin at its very peak. In the past, it has been one of the best speculative assets forms by far, with returns that even Apple or Nvidia stocks couldn't reach. For comparison, the Apple stock was around $5 in 2010 and approximately $200 in the year 2024, achieving a theoretical return of 4,000% or a 40-fold increase. Bitcoin, on the other hand, was only $0.1 in 2010 and worth around $50,000 in July 2024. That's an increase of about 50 million%, or in other words, its value has multiplied by the number 500,000. And even people who bought the Bitcoin at the very peak in 2017 or the peak in 2021 no longer have lost money in almost all cases, if they did not sell their Bitcoin but hold. And with that said, now let's talk about the risks when investing in Bitcoin. The first risk is completely avoidable: forgetting your own passphrase. Since you only have access to your Bitcoin wallets to your own passphrase, whether it is on a special storage device or in a wallet, a Bitcoin account for the lack of a better term, losing the passphrase also means losing all of your Bitcoins. There is no third party, like a bank employee, to whom you can present identification documents to regain access to your coins. Once the password is gone, all Bitcoins are also gone until you recover it. Furthermore, just like in the stock market, I'm mentioning the Wirecard stock as an example here, there's also the potential for fraud. This is facilitated by the lack of a third party to reverse transactions. If you deposit your Bitcoins on a cryptocurrency exchange like FTX and the exchange goes bankrupt because it did not keep its books orderly and did some criminal activities, the Bitcoins are also lost. The saying goes, therefore, not your keys, not your coins, meaning if you don't have the keys, they are not your Bitcoins, because you no longer have direct access to them and you are not in control anymore. Furthermore, Bitcoin also don't have any hard assets that can be liquidated in the event of, let's call it, a bankruptcy. Unlike a bakery that can still sell its licenses, equipment or property, even if there's not a single cent in the cash register. With Bitcoin, it is different. If no one is willing to pay even a cent for Bitcoin, its value drops to zero. There are no hard assets to liquidate. A total loss is therefore possible with Bitcoin. Also, due to its decentralized nature, Bitcoin is far less regulated, and you can only see individual Bitcoin accounts online, not who owns them. This makes fraudulent schemes like wash trading or market manipulation by buying and selling large amounts of Bitcoins from seemingly independent persons possible. Bitcoin has also proven to be extremely volatile in the past, compared to products like an ETF on the Dow Jones and most stocks, and even to investments like gold and silver. Strong price fluctuations have indeed occurred many times. There's also the risk that individual market participants can significantly negatively impact the price by selling large amounts of Bitcoins. This happens when the state of Saxony from Germany sold the Bitcoins obtained from the confiscated assets of the illegal Movie 2K operation, causing the Bitcoin price to drop from $72,000 to just $50,000. And of course, persons, organizations, and countries like El Salvador could theoretically abandon Bitcoin as a currency anytime, which of course would negatively affect the price of Bitcoin as well. Additionally, banning the possession or trading of Bitcoin would also negatively impact the price, and the more countries theoretically ban Bitcoin, the lower the price would be. Bitcoin is also extremely volatile. And I stress this for the second time, strong price fluctuations occur regularly. And this is really important, like all other forms of investment, past gains are no guarantee for a future price rise. So this part of the video ends here. And with that said, the video part about Bitcoin now ends here. And lastly, there are many alternative cryptocurrencies to Bitcoin, collectively known as altcoins. Among them, the second largest currency called ethereum, or ether, as the coins themselves are called, is the most well known. It is intended not just as a deflationary decentralized currency like Bitcoin is, but also as programmable money. In other words, with Ethereum, so-called smart contracts can be concluded. These are programmed trustless contracts that automatically oversee business transactions without a third person or a similar watchman. You might also know this currency as the reason why graphic cards prices skyrocketed from mid-2016 to late 2018 and then again from 2020 to 2021. This happened because while Bitcoin is now calculated on so-called ASIC computers, basically specifically built computers used only for Bitcoin calculations, calculations for securing the Ethereum network continue to be profitable on modern graphic cards like the RTX 580 or the NVIDIA GeForce RTX 3060 Ti during Bitcoin's and Ethereum's price surges. However, since Ethereum no longer secures the network through so-called proof of work, meaning via computing power, but through so-called proof of stake, securing by held Ether currency, there is currently no increased demand from graphic cards for Ethereum mining, as this is simply no longer possible. Additionally, there are many other applications of these alternative currencies, as well as many other alternatives to Bitcoin, that I won't discuss here due to time constraints. I also won't go into criticism of Bitcoin as a concept from the perspective of energy consumption and its use for criminal activities. And with that said, this is it. And now it's your turn. What are your thoughts and ideas about Bitcoin and cryptocurrencies in general, and the risks, dangers and rewards they could potentially bring? Let me know it down in the comment section. And again, this was just an FYI video, and next time we talk again about anime. And while you type, I say thank you very much for watching, and special thanks to _other ASK, Bad Guy Yi, Bad Burrito 316, Beezer, Ben C, Brandon D, Chrissy, Crowley 0221, Sia, Crystal Prime, Dead Slime, Death is Mercy, Deathless Dragonlord, Demon Xenomorph 1987, Devin Downen, Ding Dong, Dinpep, Dragonlord Placido Saxophone, Duckwagon, Dunkler Krieger, Dystopia, Dystopia II, Enigmatic Unicorn, Feral Shivan, Guy with That Head, Hector Moreno, Hoss, Huster, Jacob G, Jana B, Jason, J. Morris, Chromius, Kyle R, Lee K. Long, Legendarius, Lelouch Britannia with a Mustache, Lexus Fox, Lord Nishikian Rai, Lord Touch Me, Loverazor, Merovec, Mr. Shoes, Mr. Tweaker, Michael R, Michael Y, Nope, Oh Hell No, Normal Toad, Oh Kill, Overlord General Gaspar, Paddy Pantum, Personage, Primus 11, Rhinomere, Cune Caracos P, Shergox's Daddy, Shadow Lightning Wolf, Shrine Keeper, Sir Axolotl, Super Tier Magic Batista Bomb, Supreme Cheese, Staris, Ted, Texas Deer, The Orc Warboss, Rock Ed Smasher, T.E. Wang, Vash Hawkeye, Vegito27, Venture Fanatic, Wilhelm, Zinukai, and Sonegon. Thanks guys. Anyway, have a nice day, and I hope to see you all again soon on my next video.